think Bitcoin's going lower before it goes higher. And Bitcoin's going to go from 90 to 400. We're not going to be at 60 for very long. It's going to go from 60 to 400. So my view is with each of these, the returns are getting lower as Bitcoin gets more heavily adopted. But, and the drawdowns, by the way, are getting lower too. My sense is, Bitcoin's going to explode from 90 to something between 2 and 400 sometime in the next 18 to 24 months. I feel very strongly about that. And I feel like buying MicroStrategy at 160, I feel like I'm stealing from people. It's like, holy shit.
Yeah.
You and I we went through the math pre-show, and this is $1,000 to $3,000 stock. Over the next, I think Bitcoin will outpace gold, and I think it will demonetize gold.
Yeah.
Bitcoin looks weakest right before it delivers its biggest gains, and the current wave of doubt may be setting the stage for its next historic move. Larry Lepard is a sound money advocate and professional fund manager focused on Bitcoin and gold, grounded in macroeconomic history and monetary cycles. Current sentiment around Bitcoin mirrors the pessimism seen after prior major drawdowns, periods that historically preceded strong upside moves. Bitcoin defies traditional asset behavior, remaining volatile and unforgiving to short-term traders, yet consistently rewarding long-term conviction by reaching new highs after deep corrections. Historical precedent reinforces this pattern. During the 2020 liquidity shock, gold surged as central banks expanded balance sheets, while Bitcoin remained flat for months. That stagnation ended abruptly when Bitcoin repriced higher, delivering multiples of gold's return in a short period. A similar dynamic appears to be forming as monetary expansion has yet to fully impact asset prices. Fears of a temporary decline underestimate the policy response. Severe market stress would likely trigger aggressive government intervention, accelerating liquidity and limiting downside duration. As adoption grows, Bitcoin's drawdowns moderate while upside remains asymmetric. MicroStrategy offers leveraged exposure to this trend, with valuation tied to Bitcoin's trajectory. In a world of accelerating currency debasement, Bitcoin and gold act as monetary lifeboats. With most investors underallocated, the cycle remains early, positioning Bitcoin to ultimately outpace gold as a dominant store of value. If this framework reshapes how you view Bitcoin's role in a debasing monetary system, share your thoughts in the comments, pass this insight along to others, and subscribe for more deep dive analysis on markets, money, and long-term investing. Now let's enjoy the interview.
It's interesting to me, the sentiment in Bitcoin land right now reminds me very much of the sentiment in Bitcoin land, after one of the other drawdowns.
Yeah, 2022.
Yeah, right. And to me right now, silver gold mining stocks are a sell, and Bitcoin and MicroStrategy are strong buys. And so, one of the things about Bitcoin, one of the things when I look at an asset, I think it's very helpful to look at the history of the asset from the beginning of time. And Bitcoin trades like a wild animal, and it rewards people who have long-term patience. And, it's had enormous drawdowns, and yet it always comes back to make a higher high. And as Fred Krueger pointed out in his excellent book, Bitcoin 1 Million, it from 2018 to 2024, Bitcoin went up 700%. If you missed the 10 best days, you didn't make any money. And so, you get these God candles, you get these really rapid moves. Let's take an example that I like to use a lot, because I've got a lot of Bitcoin friends who are kind of crying in their beer, like, Jesus Christ, you're making a ton of money on gold. Why isn't my stuff participating?
Yeah.
And I'm like, just relax, it's going to.
Yep.
And it's not only going to participate, it's going to do better than gold. But that's, you're being tested in terms of your patience. In 2020, COVID came along. They pivoted, COVID came along, the Fed printed a ton of money, and gold went from 1,200 to 2,000 really quickly,
Yep.
okay, from March to May of that year. Bitcoin flatlined between, 5 and 8,000, just flatlined. And I had a lot of Bitcoin, I had a lot of gold, and I was looking at this, this is really weird. How come Bitcoin's not moving? Well, then one day Bitcoin woke up that summer and went from 10 to 60.
Right.
So it went up 6x in like 3 months. And that's just the way it behaves. And so what do I see happening here? The big print's going to become very apparent sometime in the next 12 months. And Bitcoin's going to go from 90 to 400. And people's socks are going to be blown off.
Mm-hmm.
And, they're going to wonder why they didn't believe. And those who sold are going to have deep regrets. the notion of selling it at, in the mid 90s, thinking you can buy it back in the 60s, don't get me wrong. We might go to 60 if we get a big crack up and a correlation of one event. But one thing is for sure, if we do get that event, what's the government response going to be? They're going to come in with the fire hoses like they did the last two times. They're going to print like crazy, and we're not going to be at 60 for very long. It's going to go from 60 to 400. So my view is with each of these, the returns are getting lower as Bitcoin gets more heavily adopted, but, and the drawdowns, by the way, are getting lower too. My sense is, Bitcoin's it's going to explode from 90 to something between 2 and 400 sometime in the next 18 to 24 months. I feel very strongly about that. And I feel like buying MicroStrategy at 160, I feel like I'm stealing from people. It's like, holy shit.
Yeah.
You and we went through the math pre-show, and this is $1,000 to $3,000 stock. Over the next, and I've said this on other shows. I really strongly believe this. Bitcoin and gold are your lifeboats in a sinking currency world where, fiat currencies are the Titanic. And, I've got friends who are, they didn't listen to me. They say, I wish I'd bought it like you did at 10,000, 20,000, whatever. And same with gold. I was pushing gold for years and it was 1,000 or, 1,500. And I said, well, okay, you're right. You didn't get that. But, what you got to think about this is it's a critical state kind of thing. And once the process of fiat failure starts, Gresham's law, as you know, that Titanic, it's going to sink. So that seat in the lifeboat now costs you more than I bought my seats for. I bought my seats a few years ago, and I got a pre-sale discount.
Yeah.
But guess what? You're on the Titanic. Do you want a seat or don't you? You got to pay more for it now. Yeah. But do you want it? Or do you want to hang? Do you want to stick with the Titanic? And it's not, that's a little over dramatic, and I'm not sure fiat's going to totally fail. But I think the point is that, and a point I try and make to when I talk to investors, old, young, whatever, is just you've got to have a piece of your net worth in things that are protected from this debasement, because we not only see debasement, but if you look at the math, you see accelerating debasement. Yeah. And so to not have, I don't know, people ask me, what's the minimum? If you don't have 20% of your assets in this stuff, you're nuts.
In gold and Bitcoin.
And both, either one.
Yeah. Or both combined.
Both combined. I probably have 80%, but that's because I'm a partisan and I'm in the game, and I really strongly believe in it. And real estate fits a little bit there too, but it's got a lot of other issues, as you know. So, to me, it's just, it's fundamental stuff. And I don't, the other thing I would say, Mark, is when I go to a lot of these shows, I talk to people, I look at the stock market statistics, I look at everything else. We're still in the first or the second inning. There are Bank of America stats that show that like 70% of the country owns nothing related to precious metals. 70%. Yeah. Before this is over, these are going to be like the .com stocks. Everyone's going to be talking about gold stocks at the shoe shine stand. And Bitcoin stocks too. And MicroStrategy. We are still in the early innings. Because this isn't just it's not a trade. It's funny. They came out, somebody gave a name to this. I think it was Bank of America, or somebody said, the monetary debasement trade now has a name. Buy gold, buy silver, buy Bitcoin. Okay. It's not a trade.
Right.
It's a monetary debasement trend that has years, if not decades, to run. Now, I would change my mind if I saw government getting responsible. I always tell investors looking to join my fund, I say, this is what can make me wrong.
Right.
If the government suddenly starts to get really responsible, I'm wrong, we're going to back off of this thing. But, and they always laugh, they chuckle.
Because that's not going to happen.
Yeah. What do we really think the odds are the government's going to get responsible? It just tends to, it's like a ratchet. It just only goes in one direction. Government wants to do more and more and more.
Yeah.
Here's Trump, and maybe he's right. Maybe we do have to grab all these countries and secure our hemisphere to protect us from, the threats of overseas stuff. But, the defense budget from $1 trillion to $1.5 trillion. Good God, man. Where's that money going to come from? I know we're going to print it.
Bitcoin is no longer just a speculative asset. It has become a cornerstone of sound money strategy in a world where fiat currencies steadily lose value. Larry Lepard reveals that Bitcoin and gold function as monetary debasement insurance as fiat currencies continue to lose purchasing power. Bitcoin serves as digital gold for an increasingly digital global economy, while physical gold remains a stabilizing asset with significantly lower volatility. Periods of frustration among Bitcoin investors are not anomalies but recurring features of every major cycle, often emerging just before powerful upside repricing. Historically, patience has been the defining advantage. Lepard says that framing the debate as Bitcoin versus gold misses the broader sound money thesis. Both assets play complementary roles. Gold offers stability and capital preservation, particularly for investors unable to withstand large drawdowns, while Bitcoin provides asymmetric upside driven by adoption and monetary scarcity. Together, they form a cohesive hedge against systemic currency debasement. Lepard knows that the global monetary system remains structurally unsound. A true reset would require a painful repricing of assets, potentially involving gold and Bitcoin as monetary anchors, though such action would be politically difficult given the inflationary consequences and bondholder losses involved. Lepard reveals that Bitcoin is positioned to ultimately outpace gold over time, even as capital inflows appear to slow. Market structure has evolved, with liquidity now fragmented across ETFs, equities, and commodities. Institutions are holding strategically, signaling maturation rather than weakness as Bitcoin consolidates within a long-term adoption trend. Let's get back to the interview.
Yeah, they're monetary debasement insurance, and Bitcoin is really just digital gold, and the world is a digital world. And, to all the Bitcoiners who are frustrated, I would just say, hang on, you're going to be rewarded. As you know, I get on Twitter, I get so much shit from both sides. I get the gold guys just attacking me for being a Bitcoiner. I get the Bitcoin guys saying, get rid of those damn boomer rocks. And I'm like, no, guys, there's a place for both.
Yeah.
Bitcoin, gold is less volatile than Bitcoin. If you're 80 or 90 years old, you don't want to have a 70% drawdown on one of your assets, right?
Mm-hmm.
And, gold has never had a drawdown like that. The biggest one's like 25%. Trump has talked about doing gold-backed treasury bonds, and Basent has said he wants to be at the table for the next Bretton Woods. I don't know, man. I don't know how to handicap that. Are they going to do a monetary reset? I talked about it in my book. That's what we need to do. If we do that, we're broken because the money's not sound. We need to return to sound money. So it's pretty simple. Do it sooner rather than later.
Yep.
Monetary reset, by the way, what does that look like? It would be extremely painful, one-time inflationary. But the government would say, hey, we stand ready to buy or sell gold at $25,000 an ounce.
Yep.
And then whether the price of gold goes up or down from there would be, they would either find themselves, swamped with gold people giving them the coins and saying, give me the cash, or the other way around, saying people would be sending them the 25 grand because the market price of gold had gone higher. And they could do the same thing with Bitcoin. They would say, $1, the Bitcoin is now valued at $1 million a coin, and we stand ready to buy or sell it. And we're going to put it on our balance sheet.
Mm-hmm.
Then effectively you've returned to a sound money standard, and that's what they should do. But, meanwhile, in that scenario, bondholders have gotten destroyed.
Yeah.
And the one-time inflation would be big, really big.
Yeah.
So, will they have the guts to do it? I doubt it. I don't know. We'll see. I've always felt like in this Bitcoin game, that's the role I play. I've tried to drag the gold bugs along. I'm like, come on, guys, come on. Yeah, gold's good, but this is better.
Yeah.
And I still believe that. And I think, people will be rewarded for owning both. I think Bitcoin will outpace gold, and I think it will demonetize gold.
Yeah.
But I think there's a real question mark as to what the slope of that curve looks like, how fast it is. I think a lot of Bitcoiners thought it would happen instantly, and that's clearly not the case. It's going to take a little time. Well, look, life is good. In spite of all the problems in the world, there are enormous benefits. In terms of your ability to educate yourself. Look at what the internet, look at these Zoom calls, look at all the things you can do. And if you have agency and you're willing to study and do the work, there's a way out of this mess. And it is a mess for a lot of people. I get that. And that's why I wrote the book. I want to try and help the average person understand why it's a mess and how to protect themselves. So I think the sooner you start to really understand what's happening, the game that's being played, and then you align your personal situation to protect yourself, which is to hold these assets, the sooner you're going to start to feel like you're not trapped. And I know personally, I've had a lot of ups and downs in my career. It's been very hard. I've been, relatively, wealthier at times, and there were times when I felt quite poor, frankly.
Yeah.
And now I'm actually kind of coming to the view that, we're pretty much right about this, and I have great comfort that this is how it's going to unfold, and so I would just say to everybody, take the time to really understand this stuff, and I think you will benefit from doing so. And there's just an enormous number of free resources on the web. Your show, so many other shows that can give you the perspective, and it's all there. So go do the work, and I think when you do the work, you'll come to the conclusion that you and I have come to, which is this is the best way to protect yourself.
Yep.
Bitcoin and gold continue to serve as critical hedges against the structural weaknesses of the global monetary system. Bitcoin's digital scarcity and growing adoption provide asymmetric upside potential, while gold offers stability and capital preservation, particularly during periods of volatility. Historical cycles demonstrate that investor frustration often precedes major repricing events, highlighting the importance of patience and long-term conviction. Market dynamics have shifted as liquidity becomes increasingly fragmented across ETFs, equities, commodities, and on-chain instruments, reducing reliance on traditional whale-driven cycles. Institutional holders are maintaining strategic positions, limiting downside pressure and supporting orderly consolidation. Capital inflows may appear slower, but the underlying adoption trend strengthens over time. In an environment of accelerating currency debasement, diversified exposure to both Bitcoin and gold offers both protection and opportunity, positioning these assets to capture value as systemic monetary imbalances continue to unfold. If you had to choose one as a long-term hedge over the next decade, would you allocate more to Bitcoin or gold, and why? Join the conversation. Share your thoughts in the comments, pass this insight along, and subscribe for more analysis on Bitcoin, gold, and the future of sound money.